All right, I think we're live now. Good morning, everybody. Happy Friday. Thanks so much for stopping by. This is GAR Capital's Morning Note. We do this every morning, 9 a.m. Eastern Standard Time here on YouTube. If you haven't already, make sure to click the bottom right-hand corner, the little white box or logo. Make sure you subscribe, like, and turn on notifications for all our videos. We really do appreciate it. Makes us grow the channel and get you more great content. Real quick, I just want to say a quick remembrance to the victims in New York, Virginia, Pennsylvania from 9/11. So again, let's give some time to reflect on those we lost and the time of a very dark time in our history in the United States. Even if you're not American, it was a horrific thing to see. So again, let's just keep that in back of our heads today and our minds and our thoughts. So again, we'll never forget 9/11. As always, I remember I was a sophomore in high school when it happened, and I actually saw the planes hit the towers live on TV. Very scary stuff. Can't believe it's already been 19 years. Wow, really puts things in perspective, guys, as always. So let's keep those individuals in our thoughts, as always. All right. Good morning, good morning. Okay, so a couple things. Yeah, this week has been absolutely rough. I'll definitely post up my my P&L on my statement. Pretty ugly this week. Just chop. I mean, first of all, we had a short week. No Monday trading. Tuesday we had a flush. Then Wednesday we had a bounce. Thursday we had a nice open, and then we had a flush at 9:30. Then a next leg lower after the Senate did not confirm the stimulus deal. They did not get that passed, obviously, and we continued down. And today we're up. So it's just been a whipsaw, seesaw, bears versus bulls type thing. And as an options trader, you're hating life. If you're an investor, you're just sitting still. But as an options trader, this whipsaw has been horrific. It sucks. It's probably been, for me, the worst week trading in about 2 years. I remember very vividly in 2018, I went 1 for 7 in trading in 1 week. The good news is that the next week I went 8 for 8 right away. I had a perfect week. To kind of reverse it this way, we had a perfect week last week, and now this week is probably around one for six. Pretty ugly stuff, but this is the reality, guys. To be honest with you, I'm not gonna go ahead and bullshit you and say, oh yeah, we win every single trade, because that's not the case. It just isn't. Sometimes you're gonna get whipsaw action, sometimes you get hit, sometimes you just analysis doesn't hit, sometimes the breaks don't go through. So that's what I'm gonna go over today. Kind of make it a technical video. We talked about yesterday the fundamental analysis of why I'm bullish long term, obviously. I always say hashtag stay bullish, but again, you could always be fluid when it comes to short term. There's a lot of short term bearish indicators that you can always play puts. The problem is that we did play puts this week. We did well on one of them, and the other one it did not because we had that bounce. So it's really tough to time. And the last thing you want to do is try to follow or catch every single move. Sometimes in these kind of chop areas and chop markets, you really just want to pull back. I mean, I had a Nasdaq futures position and I got stopped out yesterday. And I thought we were actually up. I was actually up about 60 points, and then it just flipped on that flush. Sucks, but it happens, guys. That's futures for you. That's trading for you. And at the end of the day, you really just get used to these kind of moves sometimes. You just get callous to the great wins and sometimes to the losses. But I just wanted to give you that heads up. But that's usually the case. So I want to go over a couple of technical patterns with you and kind of give you some short-term views of what I'm looking for moving forward. What I have noticed is that there is a lot of fear in the market. Again, I can only base it on what I read on Twitter, Bloomberg, CNBC. There's a lot of people that are calling for more losses and more downside. Jim Cramer, for example. And again, everyone has their opinion. We all see the same data, obviously, but we need to kind of look at the big picture too. And again, guys, you could be bullish in your stock portfolio and still trade downside action on options or futures. So that's kind of the good way to give you flexibility. But again, I talked about this August 28th. I posted it saying that if you want to take some profits on your big gains for the month of August, and ever since the March lows, that would be a very prudent time to do so. I did not, and I don't care if I did or didn't. I don't care if I pulled profits out. I don't need to. Again, I'm just the type of person that I'm a long-term investor anyways. But again, if you're someone that needs the money, again, the last thing I would want you to do is to sell stock because you need to raise cash to pay bills, as an example. So again, as long as you have that kind of mentality, then you should be okay. So a couple of levels here. Let's take a look at MES, which is, I'm going to go here, micro E-mini futures. What I really want to look at here, guys, and I want you to write this down, is the Tuesday lows. So based on the 20-day movement, 20-day chart here, you can see 33.14 is your 20-day low or Tuesday low, which I call. Now, again, you could see basically if you want to go ahead and take a look at a channel to the downside, we do have, if we're basing this on the channel, we still have a lot more room to go. Now, again, we're about 32 handles away from those levels. My guess today is that we're basically going to chop around and not much going on. And that's going to just kill premiums, especially if you're trading same day expiry. So you have a lot of things working for you, a lot of things working against you. So I'm going to give you the bear thesis. The bear thesis is that you have a direct fall. You have honestly just a falling channel here. You could see it. And that 33.14 Tuesday level could be retested. The question is, does it hold? Which would be kind of bullish if we bounced off that, then you'd be getting a double bottom. But if it breaks, then you have some other levels to look at. And I put it here on the daily chart. And you could see, guys, really to be honest with you, the S&P 500, guys, and we started here in January, is still green for the year, about 3%. So we've really only fallen from the top about 6 or 5%. So it's not even a correction yet. So if you are thinking there's more bearish moves here, or if we even go red in the S&P, there's a little more pain to come. And that's fair enough. You could think that. That's fine. But the fact that, the world is panicking, I just don't believe that thesis because we're still green for the year. And we've had a lot of volatility. And the volatility has been there since March. Now, again, you always get these kind of big moves and pullbacks. It's normal. But every time we've had a pullback, you can see here on the daily chart, we have been bought to the upside. Now, again, even here would be the last time we didn't get a buy on the pullback, which was around February, March. Now, the Fed was not as easygoing during that time, sure. But to be fair, you still have a bigger horizon. You still have a lot more months of the year. I believe we have about 4 more months in the year. So again, anything could happen. Elections are happening. There's a lot of factors going on. Keep in mind that if you are a hedge fund manager or a big time investor, or a mutual fund manager, as an example, and you believe that Biden will win the election, and they may change a couple of things in the tax code in regards to short-term capital gains by increasing that, this would probably be a good time to actually bite the bullet and pay the taxes now. Again, if you're going based on polls or gut feeling or just risk management. Now, if you think Trump is going to win, as an example, and you believe that taxes will be still kept at a lower level, then again, things are going to start looking cheaper to you. Now, valuations can be a little stretched, sure, but again, if you're forward thinking that we're going to get out of COVID, again, NFL just started, which was very nice to see. In Florida, 50% bars are reopening, 50% capacity, which is right in time for the NFL season. I believe there was a little bit of pressure there. That's good. The only thing that kind of stands out is the vaccine thing. We're not getting a vaccine yet. It is a little rushed. AstraZeneca said, they may have an illness happen during the trials. So again, vaccine may be months away, maybe a year away. We don't know. But again, like I said in March, I'm betting on America. That's why I'm still bullish. But again, looking at short term, which is what I want to look at with you guys, is the levels I'm looking for. So let's take a look at S&P, which is kind of the same as SPY. I'll go to S&P first, the future side, and then we'll look at SPY, and then we'll look at Qs and NASDAQ, and we'll kind of work our way there. So if there's one thing I want you guys to look at is always kind of look at an upside down triangle. When you're doing your analysis, start again at the top with indices. What are indices? S&P, Dow, Russell, NASDAQ, right? Those are your big four that you pretty much want to look at. Then next, you want to go into sectors. Sectors, what's a sector? Big sector, technology. You can take a look at that. You can take a look at housing. You can take a look at energy. You can take a look at materials. You could take a look at um, financials as an example. And then you go the next one down and you start looking at individual stocks. So again, it really is indices, sectors, individual names in those sectors because most sectors move in place. So if I say financials, you take a look at the XLF. If I say tech, you take a look at QQQ. If I say energy, you want to take a look at XLE, which is an ETF. If I say take a look at semiconductors, which is part of technology, SMH, which is a semiconductor ETF, and so on and so forth. And that's how you start breaking it down and starting seeing what's bullish, what's bearish moving forward. Obviously, when we talk about the election, I will talk about that on a future podcast, what it means to you, what to look for, who's going to win, or it doesn't matter who I think is going to win, it's whoever wins. And we'll talk about both scenarios. Again, I'm waiting for the debate to really get that straight. Okay, so looking at here on the S&P, Again, there's a couple of things I'm seeing here. Now, I'm gonna go break it down by this week. So Sunday, we had a big drop Friday, excuse me. Then Sunday, we had a nice pop and then a fade. And then Monday, we had a nice pop into the open right around to Tuesday at futures, right around 2 in the morning. We fell, and then we kept falling, falling, falling. And then the selling card started subsiding right around 1 p.m. And at 2:30 is usually around when margin calls happen. So people need to liquidate their day positions if they're especially red. And then we usually get a little bit of an acceleration to the downside, and we closed pretty bloody on Tuesday. Tuesday's futures, we actually gapped down. And funny enough, I think I had the 330 SPY puts, and we were in the money. And then we had a nice bounce on Wednesday, just a straight squeeze up. And we didn't retrace all of the Tuesday losses, but we were almost there. We tapped the 100-day, and then we kind of just stayed sideways on that Tuesday on futures after that. What I'm seeing here is you're seeing a double top. Now, usually people say double top. That's a pretty big indicator there. Now, usually to me, double top, you could either be bearish or bullish. Again, people say, oh, it's bearish double top. Actually, I don't even believe in double tops. I usually think that's pretty much an upside move. Now, the only time that I see double tops and double bottoms on the same channel, to me, it's complete chop, and that's where it's a red flag. Like you don't want to even get into that. And I think we might be getting there because you're starting to see one bottom, two tops, and we may just even retrace back to retest the Tuesday lows. Again, the Tuesday lows to me is the big key. You need to write down 3314 on your S&P alert. If we tap that and we break that, then we have a little more downside risk. What downside risk from am I saying? Well, then you could really start talking about 3200 S&P, and you could write that down. That'd probably be your next support is right around 3200 to right around 3250, which is about another 100 points in the S&P. And if we bring up the SPY, we can do that together. Again, I'm just going by short-term analysis here. Again, the low is 329.65. I even put a Fibonacci level on the hourly chart. If I bring up the 4-hour chart, you could see right around here will be your next support, right around 320. So 320 would be 322, 320. If we break 329.65 or 330 on SPY, that is your bottom level. That is your Tuesday lows. If we retest and break, very ugly. If we retest and bounce, honestly, I'd be buying more stock there. That to me says more of a bullish indicator than anything else because it shows that the bulls are willing to defend those lows and still bid that up. And not only just once, but twice. So again, once it could be an anomaly. Twice there's a trend. So again, to me, that shows a little something. I'd buy stocks, but I wouldn't trade it because then you could start getting chopped for the rest of September, and then you'd be back to a May trading scenario. And May 2020 this year was very ugly and choppy. So again, SPY and Qs have been very similar. So again, you have to be very careful. Wait for these breaks. Do not try to trade in between them. Same thing, 266.35 on the 4-hour chart. You could see kind of the same support level, 256, about another $10 below the Tuesday low, which we could definitely, again, if we break, that'd be my target. If we bounce, again, I'd probably buy more shares of stock that I want to buy, but then we'd be chopping around. So if you're looking for trading action, you want to break those Tuesday lows. If you're looking for an investment opportunity for a bullish bet, then you want to bounce off those Tuesday lows. Again, it really is based on that. So remember what I'm telling you. You want to do indices, you want to do sectors, and you want to do individual stocks. That's how you want to play it. Just a heads up. So just keep that in mind. Just be very careful. September is looking extremely choppy. Again, it's all technicals here. There really isn't any catalyst moving forward. The only catalyst I can see is Apple on September 15th, which is the iPhone release or the iPhone unveilment. Now, it could be priced in. Apple has been kind of falling post split after the big rise. So again, if you're looking for an opportunity to buy the stock, especially at support at these levels, I'm okay with it. I'm looking at around 104 to add some more. I've added already, so again, I can wait for around 104 and see if we do test that. Now the iPhone, could it be bullish? Sure. Could it be a sell the news event? I mean, we've already been down a little bit, so my inclination is that we'd actually go ahead and bounce a little bit, maybe test 120 for next week. It's a hell of a bet, but you're betting on the iPhone. What you could do is take a look at the 120s for next week, or even the 118s next week if you want to be a little more prudent, to be a little more expensive. But the 120s would be a good one. Take a look at the volume, and then if Tuesday the iPhone acceptance and you see the price target upgrades on a Wednesday are not as bullish as you'd like, you can always pull the ripcord, maybe go half position. So that's something I'll be watching myself. I may just trade that on my own, but I want to see the price action today. That'll tell me a lot. Again, I want to see that retest of those lows. Okay, sorry about the monologue being longer than expected. Let me go and answer some questions. Get out of my leap calls and renter and just call them the Japanese Supreme Killer. It depends on what stock you're talking about. Is it too late to get it up to buy Peloton call? Yeah, that's already baked in. The Peloton call. I went ahead and demoed with the students. I demoed the 100 calls on Peloton. It would have been nice, but now it's fading a little bit, and it's a same day expiry. I mean, I would stay away. What are you watching today? Again, I'm watching S&P and I'm watching Qs. Big to me. Gotta watch those. Thoughts on Apple fall sales? I think Apple is going to crush in the third quarter. I think that if you thought Apple had a really good second quarter, third quarter for a lot of companies is going to be strong because we're starting to open up a little bit. Even air travel is opening up a little bit. It's going to take a little patience, but that's in October. So we just have to wait for that. And keep in mind, Prime Day is going to be in October as well for Amazon. Any thoughts on space? I actually added a position on space long term on my portfolio, I think about a week ago, and I like it. I like it long term. Again, you really have to have the patience for it. If you want to play space to the upside, you need 1838. And again, if you want to play space to the downside, you're around 14. I think I would reload on space a little bit right around 1450, 1480. That seems like a very prudent place to go. Baba, I own long term. And looking at it here again, just with the market, again, you've seen some boosts and falls. It's a great company, obviously, but again, if you're looking for a place to buy, I got 249.98 or on 250 is my buy level. We hit as high as 300, but in order to change trend, you really need to break the 200 day if you want to trade it. But again, you could see just a downward wedge here, and we may just retest 267.36, which would be around this week's lows, just like we talked about Qs. Thoughts on Visa? Love Visa long term. I own it as well. And again, as an investment, if I want to play it, I have an alert at 158.85. I'm going to go ahead and cancel that. I would place an alert right around 195, 69. All right, 159, 195.77, same deal, a couple cents off. And that'd be my level to buy and add some more. It's right around $200. So about a $5 move to the downside on Visa, I'll be a buyer of that. AMD, love long term as well. And again, you're pretty much kind of retesting the low 76.33. Again, now you're just in range. Nothing to do here. But if you do break above around 83.50, then I would probably play some calls and probably just target the 84.50 level, which would be 84.77, 84.50, which is your 200 day. Your 200 day really dictates to me what I see is your new trend. So a break of the 200 day moving average would change trend to a little more upside, past the upside, instead of where we are below it, which would be still bearish. Xbox and PlayStation sell it's like the AMD. Absolutely. Again, if it's a blockbuster new console and everyone starts buying it, AMD has to create more of those chips for those systems. I got Docu 225 next week. Leave or stay. Okay, sorry. Leave or stay. I had to read that over. Wow. Which ones? The 225s? That's a rough one. I mean, that's a really tough one. You're basically going against the trend here. I'd pull the ripcord, man. Rip off the bandage, move on to fight another day. Because you're definitely not. I mean, I feel bad for anyone who bought the top on Docu. It may not happen to bounce back right away. I like it long term, but if you were looking to buy this name, DocuSign, you may be getting an opportunity pretty soon, right around 171. So again, the chart is not very pretty. Thoughts on Adobe price upgrade? I love Adobe long term. I already have enough what is this? Enough cloud companies in my portfolio, so I don't want to add more cloud. I already have the juggernauts, which are Amazon and Microsoft, and I also have SpyG, which has CRM and Adobe in it already. So I don't want to add it individually, but I do like Adobe long term, absolutely. And it's actually pretty close to the 200 day, which would break the trend. right around 498. So it's about $20 away, actually $11 away. So that's actually a really good sign. Adobe's actually pretty much holding up better than most of the tech companies, which is a really great sign. Good morning. Any advice on investing in certain ETF for long-term retirement fund? Thanks. Well, Mario, it's a good question. It really just depends on you with regards to what your risk management is, how young you are, how old you are. So again, my favorite ETF is SPY-G. Again, it's very growth heavy, pays a 1% dividend. I know, not a lot of money, but again, it has great companies in it, big cap tech in it. So again, I buy SPY-G every week. It's my favorite ETF. It's cheaper than the SPY, but again, it's not as diversified with other industries, but I stick with what's working. So I think SpyG tends to be a good one. Take a look. You can Google SpyG, just type in the ticker, and you can take a look at what they have in it and what they have looking forward. And also, what I like about it is a very low expense ratio. Again, just when it comes to ETFs, keep it simple. Buy an S&P fund. Very simple. Shop under 900, 900 puts under 920. Just want to confirm my levels. Let's take a look at shop. Yeah, I see it here. 900 seems to be that support. But again, there's a gap to fill too here. So yeah, definitely could see a little more downside here on Shopify. And I think 900 is definitely in range. But anything below 928, I would say anything below 931, 900 would be your next fall because you see that gap right here. You could see it. Tesla breaking 427 resistance next week. Well, we have Battery Day coming. I don't know the exact date, but you could see that it is holding up better. Obviously, you had a big flush from 538 all the way down to 308. Obviously, I didn't get to buy. I was going to pull at 300. I didn't get to fill it. So a big $82 jump. Again, 200-day moving average to me tells me the trend. If we break 418, it'll show me that it's a very resilient name like Tesla, and I do love Tesla long term, and I've been buying. So again, above 418, I'll probably throw in a couple more dollars to that position, and I think we get there. But is it next week? I don't think so. I don't think we have a catalyst there. I think by next week, if we do not retest the Tuesday lows, 400 will be in play. But other than that, 420, 427 may be a little high, maybe a little too aggressive. So and right here again, I'm trying to be prudent because again, I'm still wanting to see the price action of today. That's the thing with the morning note. All I get to see is the futures, not anything today during the session. And I've noticed that right at 9:30, guys, we get a sell of most stocks in the morning. So right at 9:30, the sell program comes in, and that's what's happened. So, all right, guys, but that's enough for me this week. I call it a week. Thank you so much for joining me this week on the morning note. Really do appreciate it. Make sure to like, subscribe, and turn notifications for all our videos. It's been a rough week, guys, but you know what? We keep our fighting, we keep fighting, push forward, and things will get better. Obviously, just like this is the name of the game. This is day trading, and I'm pretty sure next week we're gonna crush it. We're gonna have a great one, and I can't wait to talk to you then. Monday morning, 9 a.m. Eastern Standard Time. We'll catch you guys. Enjoy your weekend, stay safe, and I'll see you then, guys. Cheers.